In trading and beyond, key performance metrics are crucial for success. These metrics help you understand your performance and guide your decisions. One such metric is the win rate ratio, which tells you how often you succeed in your endeavors. It's a straightforward yet powerful tool. Imagine you're a stock market trader. You need to know how many trades were profitable. This information is vital for assessing your trading strategy. By analyzing this metric, you can refine your approach and increase your chances of consistent success. It allows you to identify patterns and make data-driven decisions. The win rate ratio is simple and versatile, applicable across finance, sales, sports, and marketing. It's not just for traders. Anyone can use it to measure success. Understanding this ratio is essential for making informed decisions and achieving your goals. Whether you're in business, sports, or any other field, knowing your win rate can help you improve and succeed. Calculating the win rate ratio is straightforward. It's a crucial metric for traders, salespeople, and anyone involved in performance-based activities. To calculate it, divide the number of successful attempts by the total attempts made. This simple formula can provide deep insights into your performance. For instance, if a trader makes 100 trades and 60 are profitable, the win rate is 60%. This means the trader has a 60% success rate in their trades. Imagine a salesperson made 20 calls and 5 resulted in deals. Their win rate is 25%. This indicates that 25% of their calls lead to successful sales. This metric helps assess performance and identify areas for improvement. By understanding your win rate, you can pinpoint strengths and weaknesses. Monitoring the win rate ratio provides valuable insights for enhancing strategies. Regularly reviewing this ratio can guide you in making informed decisions to boost your success rate. Interpreting the win rate ratio requires context. A good win rate varies by field and circumstances. In high-frequency trading, a win rate above 50% can be successful with effective risk management. In sales, a higher win rate is often desired due to fewer attempts. The win rate ratio shouldn't be viewed in isolation. Consider average profit and risk involved. Analyzing these factors together provides a comprehensive understanding of performance. Section 4. Applications of win rate ratio. In finance, traders use win rates to evaluate strategies and risk management. Sales teams measure the effectiveness of pitches and identify top performers. In sports, coaches track win rates to adjust training regimens. Marketing campaigns assess the effectiveness of channels and messages. The win rate ratio helps professionals measure success and make data-driven decisions. Understanding this metric provides a competitive edge across various fields. Section 5. Limitations and improvements of win rate ratio. The win rate ratio has limitations. It doesn't account for the magnitude of wins or losses. While it can provide a quick snapshot of performance, it often lacks depth. For instance, a trader might have a high win rate but still be unprofitable if their losses are significantly larger than their wins. A high win rate can still be unprofitable if losses outweigh gains. This is why it's crucial to look beyond just the win rate ratio. Understanding the context of each trade, including the risk and reward, is essential for a more accurate assessment. Consider the win rate alongside metrics like average win and loss size for a comprehensive view. These metrics provide a clearer picture of overall performance and help in identifying areas for improvement. External factors like market volatility can impact outcomes. Market conditions can change rapidly, affecting the success of trades regardless of the win rate. Being aware of these factors and adapting strategies accordingly is vital. Focus on controlling your process and risk management to mitigate these influences. Implementing stop-loss orders and having a solid risk management plan can help protect against unexpected market movements. A well-defined strategy and continuous learning improve long-term success. Regularly reviewing and refining your approach, staying informed about market trends, and learning from both successes and failures are key to becoming a successful trader. Section 6. Conclusion. The importance of win rate ratio. Understanding and utilizing the win rate ratio is essential for success. It provides insights into performance and helps identify areas for improvement. Combined with other metrics, it offers a comprehensive view of success. Monitoring win rates helps optimize strategies and achieve goals across various fields. Don't forget to like and subscribe to the channel for future videos.